is up? Let me figure out this camera situation. Hope everyone's doing all right. If I move this up here, this might have enough room for the camera. Oh, there we go. It looks kind of dark. Sorry about that. I'll try and pump up the brightness a bit. I think I changed the filter on my camera. 1 second. Black and white's no good. That's not too bad. That's kind of bright. That's, yeah, we'll just go with that. What's up, David? What's up, buddy? What's up, Sean? Boxer? Jack? How are you, Jack? Red start to the day. Yes, that's right. I see that we're playing around a lot with the big old range of $30,000 and $31,000. As established by the previous activity from over here back in April. You know how we came up here? We struck 31K as resistance. Very significant as resistance. And lo and behold, we lost 30,000. And then we hit it as resistance here. So that's like another SR level that we have to keep in mind. So there's two big SR levels from the past, like from over a month ago, right? And lo and behold, here we are now fighting the same levels. So we're using the 30K level as support and the 31K level as resistance. So there's this beautiful range that we're bound by. And it's like, are we breaking down? Are we getting more discounts on Bitcoin? Or is it time to level up to the next level? That's the big question. Johnny Sevenfold, what's happening, man? How's it going, bro? I am Mr. Dino, by the way. Hey, what's up? Changed my name because of the YouTube channel I just created. Going to see you. Oh, cool. Good to see you again too, man. So moving out to like, say, I don't know, like the daily. Actually, let's go weekly. And I'm going to turn off a lot of these key levels just so we can see it, and also the price levels. So we had our good old falling wedge. That resulted in a really nice move up. So that's cool. That's all easy and well and good. Now if let's establish what we're working with here. So we've got, what's the structure? What's the macro structure of Bitcoin at this point in time? We came up rapid in the last bull run, right? The last proper bull market, and hit a high of 42,000. Corrected back down. Where did we find support? In this kind of 28 to 32K zone here, right? So it was a cradle of support. Let me just correct that. It's like there, right? The little cradle of support. And then, you know, we got our all-time high at the time here. There's our other all-time high here. Technically, like, well, you could argue that's like kind of like a double top. But anyway, first double top, we'll call this A. Second high, or sorry, first high A, second high B. Now, where did we come down and find support? At X. So we made Y here, right? Similar zone. Now this was like a retest of the zone, but it was like in more of a positive, like the higher end of it. So things were still rather bullish here, technically. Like even after we dropped, you know, this was sign of support, or people coming in, or you know, the market came in to buy that level because they saw this level as a really strong possibility of support once again. So we preemptively bought it up, and I'll show you why that's a thing with smaller term price action that we've had recently. So So that was like the XYZ of this zone during that 2020, 2021 bull market. And then, you know, the crash that happened and the bear market that happened last year, all of 2022. So that's why this level is significant, this XYZ situation. So I'm just going to delete all this. And let's sort of draw it out as a zone. So I'm guessing, like, let's just say I'm pretty comfortable calling $28,000 like the bottom end of that zone. And then the top part of the zone would be like, I don't know, what's this low here? That's basically 33,000. It's 32,900. But I'm just gonna lock it to that line there, which is, let's call it 33. Let's get it real big and round numbers just so that we can work with that. And then the low end of the spectrum, actually it shouldn't be that low. Let me fix this up. I would say it's like, yeah, 28. Maybe even a little higher. 28 and a half. Something like that. So if we take that band and we just expand it out into the future, this was the earliest point in time for when that structure was coming into play. So yeah, we're smack bang in the middle of this cloud of this zone of support resistance. So far so good. Like this is showing that we're in the neighborhood. Like we're ready to see that next leg up if it's coming, right? If we're gonna crush through this resistance, you know, now would be a good time, because like we've come up and tested it once, pulled back, and then now we're on test 2 of this zone, right? You could argue, like, I mean, this is the weekly time frame, so there's been many weeks that we were bashing against it here. It's like 4 weeks we were trying to fight through it, and then we finally broke it, but we couldn't really hold structure above it. Our structure sort of came in down here and down here and here, like the support side, as we, you know, corrected here. Now, I was going to show you that similarity between looking for support. So if I go to the daily and let's see, where is it? 52, sorry, it's 25.2 was the level, the highs that we were dealing with, which is roughly here, right? I'm gonna make it a different color so we can see it, make it yellow. So this level here was anticipated as being a support because of the two really big examples of support, of resistance here, right? Support resistance level, A and B. And then price got through that, back tested it. Now initially, like this is my comparison here, this low here and this low here, two examples of the market seeing this level as a point as structure and a point of support for buying. So I dare say, like, I'm pretty sure this is why we got this reaction initially to, you know, to that level. Now, lo and behold, Gary Gensler chasing after Binance. Like, there's a lot of different reasons as to why we crushed down through that and dipped through it. But all in all, this was a really nice retest of that level of resistance, if you ask me. Like, usually with support resistance levels, it's not to the dollar. It's not like perfectly, you know, bang pivot off the line, like to you know, pinpoint accuracy. You will get a bit of activity through it, right? And that's what we got. It was like a dirty test of support, you could say. Just like this level we're dealing with here is resistance, right? we've had a pretty dirty test of that resistance here because we got some activity above it, and no doubt trapped some people that got in a bit eager and went long above that level, which is $31,000. So I'm going to remove this. So yeah, like don't take support resistance levels too, you know, critically with like to the decimal place. You know what I mean? Like it's a zone. Treat it as a zone. You want to see like large time frame candles, like daily or weekly structure above to consider that zone, or to consider that level tested and like used as support. So an SR flip. So I'll use an example as of it here. Like, okay, this is resistance, yeah? This is resistance. Now, we got a wick through it here. Now, that is not a break of resistance. We haven't flipped that resistance yet. Where does it flip? We got daily closes above. Okay, that's great. It's one thing to break it, but it means a lot if you can back test and find support on it, like we have, like this. See how we came back and we've proved it. Not only did we break it, but we back tested it as support. So we've flipped that level as, you know, new support. Old resistance, new support. So now that we've established that, it's like, well, why are we like finding so much resistance here? Like, why is there so much traffic? And that's because of all this action in the past. Look at all this that we're dealing with. This is the zone. This is the blue zone of resistance that I've got here. And a lot of other analysts, I'm sure, have this same level that they're looking at. And that's why the market is reacting the way it is to this level. You know, there's a lot of people like, you know, a bit maybe gun shy of going long at this range. They want to see proof before they go long, right? And that's actually the what would you call it? The responsible way to take a position is when you see evidence that there's actually gonna be structure and energy beyond a point. So like, you know, you may get a lot of people waiting for a back test of the top of this range before going long, and then seeing like another leg up. So into the future, like I see this level here very significant. Look at this, the pivot. I'm pretty sure I discussed this in my previous live stream. There's this fairly significant pivot here. There's another one here, which was kind of like the head and shoulders of this whole structure. Now those levels, to give you a dollar value, $48,000 and I think 52. Yeah, 48 and 52 are quite significant levels that we should be looking at. You know, if we break this $32,000 resistance that we're in the thick of it right now. We're in the battle. So we're not out of the woods yet. There are a lot of technical reasons why that suggest that this is just a matter of time before we see the next leg up and break through this cloud, right? And I'm not saying that it's impossible that we could get rejected again and then come back down, because that could happen too, but I'll show you from an oscillator perspective. I want to show you the significance of the MACD. So I'll just, instead of closing them, I'll just collapse them like that, and then we'll go MACD, and I think it's the weekly. It might even be the monthly MACD. Yes, the monthly MACD. Look how primed this is. We are almost getting a monthly MACD cross. We're below the histogram. The MACD's below the histogram, and look at it coming up. The MACD's about to cross the signal line. That is a big time buy signal. And this is the monthly structure, guys. That's quite significant if you ask me. That's a big deal. you don't get that kind of setup and then just some, you know, like, it would take a lot to turn that back around. But yeah, I don't know. Go study the MACD and see like that this is a very significant indication of what might be coming. Let me get a chart that has a lot more history on it, and that is the Bitcoin index chart. BTC USD, I think. Yep, this is the Bitcoin index. So if I grab my oscillator set, let's go back to the monthly time frame. Now these vertical yellow lines, they're just the halvings of Bitcoin. Now they removed the log button, so to get logarithmic view happening, just press Alt, or it's Alt and L, and you get log. If you're a log, if you like using the log view on your macro analysis. So for the monthly chart, has there been any significant dips like on the MACD from a monthly perspective? And not really, no. Maybe here was the closest kind of similar setup. So this bear market has pushed Bitcoin's monthly MACD down to levels that it hasn't seen yet on a correction. This was a really healthy correction. Really deep and huge opportunity, right? So if we get anything similar to this, I mean, look at this MACD cross here. Let's circle where that is on the chart. It was basically in this region here. We'll go down to the daily and see, like, you know, why was that such a big deal? Okay, what are the similarities? Bitcoin had an all-time high. It bear marketed its way. It had a bear market and made its way down to a double test of a level of support. So just here. The MACD monthly cross happens somewhere in this zone. We know that because we just circled it on the monthly chart. And now, what ensued after that? This multi-year bull run that took us up to the all-time high of 20K. So just because it happened in the past doesn't mean it's necessarily going to happen exactly like that in the future. But, you know, that kind of action isn't impossible. Like, it's proven that it can behave like that with the MACD setup. So that's looking kind of cool. I think there's a case there to see some further upside, at least, on Bitcoin in the coming like weeks or months. This year, there's still a lot of uncertainty, like with the economy, that kind of thing, like with the interest rates and the CPI, like the inflation rate. But even both of those, like, even though Jerome Powell of the Federal Reserve still has hawkish tone, like he's still kind of pessimistic about the rest of this year. Like, he still thinks we need to, jack up the interest rates a bit further. There is signs like that, they're achieving their goal. Like, it's kind of like this weird misalignment, I feel. It's like, okay, well, let me just show you what I mean. If I open up the inflation chart, this is the Federal Reserve, the FOMC's goal is to hit this white line, right? This was the peak last year, inflation, 9.1%. Do you think it's heading in the right direction? Do you know, like, has their action of raising the interest rates achieved much of their goal? Yeah, I would say at least 2/3, if not 3/4 of their battle is won already. Like, we've only got like a quarter of the way to go. There's the halfway point. There's 1/4. So we've done the first quarter, we've done the second quarter, we've done the third. This is just the last push to 2%, which is their target, right? That is their target. 2% inflation. So, like, it just feels weird that I think maybe he wants to remain like hawkish and and measured and sobering so that he doesn't ignite a bull market too soon and undo all of the effort that they've achieved with, you know, what they've done the past like 18 months. So yeah, I think that's my theory on what's happening. Let's check the interest rate. Interest rate is at the same level it was just prior to the global financial crisis of 2008. You know, when that crisis happened, they had to cut the rates because, you know, the economy was breaking. They had to take the pressure off the economy and no doubt print a whole bunch of money to stimulate the economy back on its feet. But yeah, we're at the same tight level that the economy got to just before everything broke. So it's kind of scary. Like, everything's super tight. Hopefully nothing breaks like it did back in the GFC. You know, we've had some small banks break in the past 12 months. Like, what's the go-to example? Silicon Valley Bank. That's a small bank that broke because of, you know, how tough things have been in the last 12 months. So yeah, we're in that kind of environment, guys. Things are tight and pessimistic. The Fed has paused. There has been a pause. That's why we've got this sideways line here in the last result. So what's that gonna do for inflation? I think it's proven to be sufficiently restrictive. They've paused. That's a hint as to they're happy with the amount of restriction that they've got going on. They're happy with how tight the belt has been tightened up, I would say. So here we are, approaching 2%. Everything seems to be on track. The stock market, look at the S&P 500. This was the all-time high of the S&P 500, late 2021, early 2022, last year. Correction, of course. Huge inverse head and shoulders. Like, something like that, right? Pivot point. Huge technical pivot. Like, you know, it's textbook pivoting right there. You know, we beat this high. That was significant. Getting above 420 was also significant because we hit it there. Came up against it as resistance. Got the break. We didn't even backtest 420. We're still up. We're still elevated. We're actually backtesting this old level of resistance, this 430. So S&P's looking still healthy. It's had a good couple of days, like 3 days there, of reclaiming this high, potentially. Might not see that reclaimed until next week, I would say, obviously, with 1 day left in the week. I mean, I don't know, that we could gap up at open tomorrow and crush it, but we'll see. Don't want to get ahead of everything, but look, that to me, that spells, you know, there is still a fight ahead of us, but we are not far from getting back to. I only see two major tests ahead of the road. This one, and then obviously the all-time high. Those are the two big SR levels that we have to beat in the stock market to get, you know, into cutting new ground, which has been the case for the last, you know, how many decades? You know, it has been a overall. I have to go out to the monthly to show it, but you know, you can sort of see the story of the S&P 500. It's not always happy days. Like there are bear markets along the way. There are corrections, you know. But you can see in the bigger picture, the overall trend is an uptrend. And are we really at the point where that stops? Like where that, you know, it's been intact since the 90s, basically, this uptrend. Is there room for some more action? I guess that's what we're waiting to see. Anyway, that's the stock market. Let's go back to Bitcoin. What is happening right now on the hourly chart? Let's have a look. Let me just go back to say this one. We're still above the 200 on the hourly. Very much in the cloud. It's all looking all right. Nothing has happened yet. It's just, yeah, we're just waiting for that action above or below the blue. We're sort of right smack bang in the middle of the test, like this cloud. So 31k seems to be like central cloud, you know. We've had a bit of activity above it, like 31.4 something. But yeah, there's still a lot of progress that needs to be made on the price. So let's wait and see what happens, and I'll be here to stream it when it happens. Until then, it's like, okay, just, you know, figure out where your major supports are, and that's like 25.2, and the major resistance like 31,000, and then wait for evidence of either of those breaking, and then take action on that. And if you're doing like me, I'm just accumulating. I'm not trying to trade Bitcoin. I just want to hold it for the long haul kind of thing. So I've got a, you know, I guess you could call it a swing position, or a multi-year, I guess you could call it investment, because I mean, I'm gonna take the profit of it when it shows itself, but I'm not trading the short term with Bitcoin by any means. I'm definitely anticipating the next all-time high, you know, the next bull run, that kind of thing. And just the way this is shaping up in the last 6 months is very reminiscent of this. You know, we very well could get a very rocky road for the rest of the year into early next year before we take off, but yeah, I don't know. We'll see. We will see. Anyway, guys, thanks for tuning in. That's pretty much all I wanted to cover in this one. And yes, I can have a look at Doge quickly. Let me check out Doge. Doge, top 20, Doge. Let me change tools here. Here it is. Let me hide everything. Doge has it seems to have shown that there's a pretty good level of support at 5 cents. It hasn't done anything yet. It just hasn't taken off yet. So there's still time. If you believe in this thing long term, there's definitely a lot of opportunity to accumulate. You know, if you need time to accumulate, it's giving you time, you know? So you haven't missed the boat with Doge, I don't feel. So, but yeah, like Jack says, I can see Doge days ahead, definitely. Yeah, I'm never counting it out, 100%. I mean, it's in the top 10 for a reason, right? It got there, like, people made a hell of a lot of money on Doge in 2020, 2021. So why wouldn't they do it again on that same tool or that same pair? Nothing fundamentally has changed with Doge. So why can't it just achieve exactly what it did? You know, no one's come in and broken the game with Doge. The chart, this is just a reflection of the bear market we've just come out of. And, you know, it just hasn't seen the action yet of recovery. Maybe it's waiting for Bitcoin to open up the door a bit further before taking off. I don't know. But yeah, we're just waiting on a catalyst, I suppose. But yeah, look, it's definitely in this massive logarithmic, like, sort of falling wedge, or pennant rather. Something like this, logarithmically speaking. Something like that. It's almost, you know what, it's almost a descending triangle on the log scale. So with 5 cents being, you know, the huge support. If you lose 5 cents, I would see that not as a tragedy, but opportunity to, you know, to get some real cheap Dogecoin, because I do think there's going to be some kind of activity that at least sees, you know, these kind of levels. Like, what's this, 16 cents? This is when Elon Musk bought Twitter and Dogecoin rallied up in excitement because of it. And, you know, tested these highs from over here. Not quite to that height, but in the ballpark. So yeah, there is a lot of room. There's a lot of potential there. There's a lot of room for potential action. It's just a matter of being patient. Like, you know, you could be waiting months before anything significant happens with Doge, but still, the potential's there. There's no doubt about it. This is an old falling wedge. Wait, this might even be a log falling wedge. Let me see. Yeah. No, it's a linear one. Okay, this is a linear falling wedge. This green one. So we're still in this structure. That structure terminates around mid to late September. So we should have a result before then of whether we bust out of it or whether, you know, we lose it entirely. But yeah, it would be cool to see Doge go back to, yeah, its glory days, MSJS. Anyway, yeah, if you lose 5 cents, mamma mia, exactly. Anyway, that's all I got time for, guys. I'll wrap it up here, and thanks again for tuning in, and I'll see you on the next stream, whenever that may be. All right, take care.